Welcome to the MHP Exchange, where the riches are in the niches. We'll show you how to invest your way into mobile home parks with real strategies, tips, and behind-the-scenes know-how to grow your cash flow. Stick around. This is where smart investing begins.
Frank Rizzo back with you on the MHP Exchange podcast. And I'm going to talk to you today about something that's probably going to make a lot of you uncomfortable. And it's why most people calling themselves real estate investors will never actually make it. It's true. 90% of the people who call themselves real estate investors are really just trying real estate, or they're stuck. And we're going to dissect in this episode why. Because I've been in this game for over 2 decades now, and I've seen the ones who grow, and I've seen the ones who've plateaued. And it usually has nothing to do with market timing or deal flow or capital for that matter. It has everything to do with comfortability. And what do I mean by that? I know investors who had at one point a lot of ambition of what they wanted or where they wanted things to go. They may have been aggressive at some point in their life, whether it was getting involved in spec deals, whether it was getting involved in some flips. But at some point, the comfortability of their capability came through. And what do I mean by that? They may have acquired a property or two where they have hit the appreciation ceiling. They've maximized the value out of it, but because they're comfortable in how they're running the property, they lose sight of what real estate or owning real estate is really about. You know, owning a piece of real estate for investment isn't a marriage. It's a long-term relationship, but at some point, that relationship has to be exchanged for something better. Now, I'm not telling you to do that in your personal life, but in a very real business sense, there comes a time where owning that same piece of real estate just does not have the same value for you as it would for somebody else. And there could be a number of reasons for that. You may have maximized the tax depreciation that you may have been able to get out of that. You may have appreciated that property the maximum you could. You cannot get much more value for the time that you're going to be invested in there. Or the equity that you have, your return on that equity, that ratio is not the same as it was the day you purchased that property. So it becomes comfortable to own that piece of property because you know how to run it. You know, it's consistently paying you $5,000 or $6,000 a month. And so the question becomes, you know, what am I going to do to replace that? Which is a good question to have. But that comfort you feel in the short run becomes the ceiling that locks you in the long run. Comfort is, quite frankly, the silent killer of compounding. The proximity that you might have to a property gives you the illusion of progress. You're right around it. It's an easy property to operate, but you're not taking the same swings that you did before. And your mind starts to normalize the average returns that you might be experiencing because it's consistent. And that becomes part of the challenge. Because when you're talking about truly being a real estate investor, the idea or the concept behind it is the compounding velocity of wealth. It's moving that money around or moving that equity around and exchanging it or moving it to bigger properties that can create more value and eventually create more cash flow for you. Small, uncomfortable moves of properties that you may have owned for 10, 12, 15 years and exchanging it for something larger, that can help create exponential returns for you. So these uncomfortable decisions you have to make sometimes lead you to maybe an asset class that you're not familiar with. Maybe you're stepping up from owning duplexes or triplexes or quadplexes to 10 units or above. Or maybe moving from a small mixed use property to a retail strip. Or maybe exchanging, those single family home rentals and turning it into, an investment into a mobile home park. But it's those uncomfortable decisions you make that's where the real growth happens, and that's when the wealth really starts to compound. And I will tell you from personal experience, the greatest difference I saw after years speculating, flipping homes, the greatest difference I saw to my net worth, it was when we started moving to a bigger asset class in the mobile home parks and started exchanging those properties for larger assets. That was the real key to our financial growth, leading us on the path to financial freedom. And it wasn't comfortable at first. There was a comfortability of knowing I was involved in a project that might have been on the other side of, the town that I live in. But being uncomfortable a little bit and knowing how to deal with that has led to huge increases and impacts in creating the financial freedom that I'm looking for. So here's the truth. Being a real estate investor is not for everyone. Some people have a place of value on that comfortability of being able to go down the block, take a look at their investment property, shake hands with their tenants, and know that the rent's going to be there on the first of the month. Some people really value that, and that's great. And if that's what you value, then owning real estate is a great investment to do that, and understand that there'll be a plateau there. There'll be a ceiling that you'll hit that you won't be able to go beyond. But if you truly want to have that financial freedom, if you're truly looking to maximize the true benefits of real estate, which is the principal reduction with the tenants paying your mortgage, which is the cash flow that you're able to generate, which is the tax shelter that you have, and how you're able to depreciate real estate as you exchange from one property to another and carry over those losses and shield income. And yes, that appreciation that real estate should have. If you're really looking to maximize those four benefits as a real estate investor, you realize that each property has a life cycle of its own, has a point where your initial return or return expectation isn't being met. Because as Sam Zell, and anybody out there listening, if you don't know who Sam Zell was, probably one of the most astute real estate investors, at least in the last 100 years. And it was a significant early investor in mobile home parks because he realized the consistency and the cash flow in there. But one of his principles that always stuck with me was every day that you choose not to sell a property, you're choosing to buy it all over again. So what does that mean? Let's say my ideal return is a 10% cash on cash return. If that's my target that I'm looking for. So for every $100,000 I invest, knowing that $100,000 is in a piece of real estate, I'm looking to get $10,000 back. And I'm using simple numbers. Everybody's number is different, but let's just use this for this example. Well, if I purchased this property, if I acquired this property for $300,000 and it was generating for me $30,000 a year in cash flow, it's hitting that target. It's providing for me 10% cash on cash return. Well, now if that value of that property is $500,000, but it's only netting for me $35,000 a year. Well, that means that my cash on cash return is only 7%. So I have two options at that point. I could be comfortable with 7%, or I exchange it for another property where I'm looking to get 10% or better. And we start the whole cycle all over again. Some people aren't cut for that. And that's okay. But if you want the stability and you're happy with hitting a ceiling, that's fine. But for those out there listening who want to build generational wealth, for those out there who want to create the type of financial freedom that they've dreamed about, the cost to that isn't just the investment in the property. The cost to that is some sort of controlled chaos. Is the fact that you're going to restart the cycle all over again to see not only if you can do it, but to produce better returns on a higher investment amount and more cash flow for you and your family. So if you have been plateauing, you have to ask yourself, am I comfortable where I am right now? And if your answer is yes, then there you go. Because that's probably the number one thing that's keeping you from growing. But if you're not comfortable and you've been plateauing, well, then ask yourself, what do you have to do different to step out of your comfort zone to reach the next level? If this episode hits home, share it with one investor who's stuck talking about deals instead of doing them. You've been listening to Frank Rizzo at the MHP Exchange podcast. And I have one ask. If you found value in this episode, would you help somebody who you didn't know how to find, fund, or operate mobile home park deals? And if your answer is yes, give us a rating below and share that rating with the MHP Exchange. And if you do, we're going to send you a free copy of our after site visit report, the same report that we use when we go down to review one of our assets to make sure our team is executing and following through to make sure the business plan is done and we're creating the value that we need to show. Until next time, happy investing. Frank Rizzo at the MHP Exchange.